Good morning, everyone. You see a question on that slide. Why does the EU matter to you? And that's a question that I can answer in a very simple and straightforward manner with a figure which is 80, 80. 80, this is actually the percentage of requirements that you, as insurance companies, insurance intermediaries, you have to comply to in your daily business that are coming not from your national regulators, but from Brussels. 80%. That's, of course, an approximation, but that gives you an idea of how much the EU is producing in terms of regulation that is impacting you, your business, and your consumers. So, of course, in that package of requirements, you have what I call the good and effective rules. So the rules that are supporting innovation, that are increasing consumer protection, that help with achieving the single market. But you also have all these requirements that you, let's be honest, complaining about because they're too many, because they are extremely burdensome, they're costly to implement, because they do not add any value to your business, to your consumers, because they're inconsistent, because they're out of date, because they stifle innovation, and because they prevent you from servicing your consumers in the way you would like to serve them, but also in the way they would like to be served. And usually, it takes between 3 to 4 years between the moment where the European Commission is proposing a new requirement at European level and the moment where you have to comply with these requirements. So I'd like to start my presentation with a recommendation to you all from the industry, from the distribution channels, but also probably from the regulatory authorities and the supervisory authorities. If in 3 to 4 year times, you don't want to spend your entire days, weeks, and months complaining that the requirements you have to comply with, or that you have to supervise, or that you have to transpose in national law are inconsistent, are bad quality, they're not effective, they're too burdensome. If you don't want to spend your entire life complaining about that, this is now that you need to take action and make your voice heard. Because today, at European level, are being discussed key regulatory proposals that are going to impact you and your business and your consumers sooner than you expect. And today, during my presentation, this is what I'm going to explain. So my name is William Vidonja. I'm the head of the Conduct of Business team in Insurance Europe. And what I'm going to explain today is first the tsunami of EU requirements and regulation that you are about to face. I'm also going to explain that within these regulatory proposals, you have a number of them that could be game changers for you and for your business. And I'm also going to explain how challenging it is going to be for you and for me to make sure that all these regulatory initiatives are of good quality and helping your business and not the other way around. But I'll try and conclude on a positive note to explain that together, industry, supervisory authorities, and regulators, also at national level, we can work and make the EU regulatory framework fit for our business and for your operation. I'll start with a few words about Insurance Europe. I think you know us. We are the European Insurance and Reinsurance Federation. We have 37 members, the National Insurance Association, and of course that includes the Croatian Insurance Association. And through all these different associations, we represent a very wide diversity of reinsurance and insurance companies, the big pan-European players, but also the small local niche players, mutuals, and so on. Our mission as a European federation is to make sure that the regulatory framework at European but also international level is appropriate for you to conduct your activities. So to make sure that the regulatory framework is fit for purpose. And to achieve that objective, we engage with the European institutions, the European Commission, in Brussels, the European Parliament, the Council as well, but also with the European supervisory authorities, EIOPA, the European Supervisory Authority in charge of insurance, but also the other authorities dealing with other types of activities like data protection, for example. And you can see on this slide also how busy the European lobbying landscape is. You have a number of federations very active in Brussels, representing different types of sector. They could be cross-sectoral associations like Business Europe, but also sectoral associations representing banking or asset management industry. We also have a number of trade union federations and consumer organizations which are extremely influential at European level. And that is making it even more important for us as Insurance Europe to make sure that all the different bodies representing the industry at European level are speaking with a single voice towards EU institutions. I will start with presenting you a visual, I would say a self-speaking visual about the tsunami of regulation that is expecting you in the coming weeks, months, and years. On that slide here, you see all the different pieces of legislation that were relevant and applicable to insurance activities in 2008, so just before the economic crisis. And here I counted 12 different pieces of legislation. 10 years later, just before President von der Leyen took the lead of the European Commission, this number has raised to 21 pieces of regulation. And I don't know whether you know that, but when President von der Leyen, the President of the Commission, took office, she committed to one principle, which is a one-in, one-out principle, meaning that for any new piece of EU regulation, she committed to repeal another piece of regulation to avoid a potential over-regulation. Of course, in practice, this has never happened. This is the number of regulation at EU level that are applicable today to insurance operation. I've counted the number of regulation, and we are at 37 at the moment. This is, unfortunately, I have to tell you, not the end, because the Commission has also presented a number of additional legislative proposals, a total now of 29. So they're presented, they're not yet adopted by the Parliament and the Council. They are in the negotiations, but of course, there is a very high risk, or chance, depending on the perspective, that all these regulations that are in the pipeline are being adopted before the end of the Commission's mandate in 2024. And then if you add the now applicable regulation together with those that are presented, you end up with a total of 66 different pieces of regulation stemming from the EU applicable to your business. I would like to tell you this is the end, but it's not, because the Commission is also working on a bunch of additional proposals, draft, that the Commission has not presented yet, but intend to do so in the coming days or weeks. And of course, this is going to add up to the legislative framework. I've counted here a total of 24 different legislations which are in the pipeline, including really significant one that I will detail later on in the presentation. We are going to change Commission soon with new leaders, and of course, all these leaders are going to come up with their own priority, with their own package on digital, on sustainability, on consumer protection, retail, on prudential, and so on. And that will add up to the rules. One thing that is interesting is that among all these different pieces of regulation, you have a number of what we call reviews. So that means like every 5 years, a text is being reviewed, very often to make the conditions stricter and to expand the scope. But that means in practice that once you have a text at European level, it stays there forever. The only thing that happens is that you have new additional requirements that are piling up on top of the existing ones. So at the end of the day, what you see here is really an exponential increase of the number of regulations that you have to abide by. And of course, that's hugely challenging, I think, for you, because you are the ones that have to implement and comply with all these different requirements. And that means in practice that you need to constantly adapt your systems, your processes, your IT, your trainings, that you need to update the way you interact also with your distributors, with your clients, and this on a constant basis. Is this digestible? Is this manageable? Is it reasonable? Is it proportionate? I think I leave it to you to answer that question, but to paraphrase someone, I have a dream that one day, one national supervisory authority or national regulators would stand up and say, it's enough. I'm not finished with the bad news, I'm afraid. Because what you've seen on the previous slides are only what we call the tip of the iceberg. So that was, in the EU jargon, what we call the level 1 regulation, principle-based. But of course, if you look beneath the level of the sea, you will see additional types of regulation and measure. The level 2 measures, implementing acts, delegated regulations, these are all additional requirements that are coming to detail the level 1 requirements that you have to comply with as well. Then you have also the level 3 measures, guidelines by the European supervisory authorities, which are supposedly non-binding, but in fact, of course, you have to implement them. And then you have the additional measures which have not a specific level 4, level 3, like statement warnings, which are setting supervisory expectations toward the industry, which are also extremely challenging to disregard, so you have to abide by this as well. And this is, of course, all piling up on all the requirements that I've explained before. What I would like to explain to you now is that among all these proposals that are in the pipeline within the European Commission, some of them might change, I would say, dramatically the way you work, the way you do your business, and the way you interact with your clients. And I've selected 3 different areas. The first one is a retail investment strategy, RIS. The second one is about digital. I think you'll have further discussion this afternoon and tomorrow about digital, but I'd like to focus on a new concept which is called open finance. And then the last one is about the risk-based underwriting, a basic principle of insurance, which is now being questioned also at European level. So starting with the retail investment strategy. Here, we expect the Commission to come up in a few weeks, just by the end of the month of May, with a package of proposals to try and stimulate retail investors' participation in the capital market. So what the Commission is seeing is that in the US, people do not save money, but they invest, while in Europe, they save money, they leave it on the banking account, but they do not invest in the capital market. So the Commission wants to stimulate that, to make sure that the money is also channeled to the economy, and especially the European economy. I think that could be a fantastic opportunity from an industry point of view to improve the existing regulatory framework applicable to life insurance, especially life insurance products with an investment element, and to improve the retail investor journey when they consider investing. And we see that as an opportunity, for example, to streamline disclosures. I don't know whether yourself you've tried and buy an insurance-based investment product from your intermediary or from your insurance company once, but usually when you do that, you are bombarded with a number of pre-contractual information. We've counted this number as Insurance Europe, and we ended up with 339 different pieces of disclosures that we have to disclose to the consumers by law. So I'm just wondering how a normal consumer can make sense of 339 different pieces of information, how that can be understandable and usable to take a decision on whether to invest their money or not. So you need really to use this retail investment strategy to streamline the disclosures to consumers. It's also an opportunity to make sure that we focus these disclosures on what really matters for consumers. Among all the different pieces of regulations and disclosures we have to provide, there's actually no space for us as an insurance industry to explain whether our products include financial guarantees and which ones, and whether our products include risk coverage and which types of risk coverage. And this is a shame because we know this is exactly what consumers need to invest their money in the capital market. They need to know whether there's a financial guarantee and they're not going to lose entirely their investment. They need to know also whether there's a risk protection element that could help them to close the protection gap. So we need this retail investment strategy to make sure that information is in the future focusing on really what matters for consumers. And we need that also to make information and the journey more engaging and digital friendly, which is not the case today, again, due to the regulatory framework. But at the same time, we know that this retail investment strategy is entailing a number of risks because the Commission is today considering adopting stricter and additional requirements when it comes to disclosure. So new disclosures that would add to the 339 you have already to disclose to your consumers. We know the Commission is also thinking about additional requirements and additional steps for the advice process, which would make it longer, probably more expensive, and less appealing to consumers. But then if consumers are losing an easy access to advice, they might simply turn on to different types of sources of information, and especially for the youngster, they might turn towards the social media and the influencers with the risk, again, of making bad decisions regarding their investment, for example, investing in dodgy assets and losing their money at the end of the day. And of course, the Commission is also considering new rules in relation to how distribution channels are being remunerated, with possibly some restriction there. But again, the key question here is, once this is implemented to insurance-based investment products, it is very likely that all these new rules are going to serve as a benchmark for the Commission to review the Insurance Distribution Directive in about a year's time, and to apply these new requirements also to non-life insurance products like motor insurance and home insurance. So this is very important to make sure that we get the retail investment strategy right for insurance-based investment products, but also in the future for our general insurance products. A second game-changer proposal, which is in the pipeline now, is the so-called Open Finance Framework. And there we expect the Commission to come up with a big proposal at the end of June this year. We don't have much details about that proposal, but what we know is that the Commission intends to set an obligation to share data. Again, potentially a huge opportunity, I think, for the insurance sector and for the consumers. Data is core to insurance. We need that to conduct our business. It's also a driver of innovation and competition in the sector. It's also very useful to develop new types of services and products that fit the needs of consumers. It's also an opportunity for potentially insurance undertakings to get access to data from other sectors. I'm thinking about car manufacturers. I'm thinking about the energy sector, and that would help to develop telematic insurance if there is a proper access to in-vehicle data, but also to develop new types of sustainable products. But it's also a risk, because at the moment, we don't know who would have to share their data with which parties, and we don't even know which data. So would the obligation to share data would be on insurance companies? With whom would you have to share your data? With regulated entities, meaning with other insurance companies, with intermediaries, but could that be also with unregulated entities like startups or the big techs? We don't know which data we're speaking about. Are we speaking about consumer data, or are we speaking about the data that you've generated as an insurance company, like the risk profiles or the underwriting models, which are proprietary data? So, of course, here it's potentially a game changer and a radical change to the industry. That could be, in the end, what I call a legal robbery, if insurance companies would have to give access to competitors and third parties to the data that you hold, for example, to big techs, without any safeguards without any reciprocity and without any compensation. That could put really in difficulty the business model of the insurance industry, so of your business. And then I'd like to mention another area, which is risk-based underwriting. This is, of course, a basic principle of how private insurance works. The higher the risk, the higher the premium, the lower the risk, the lower the premium. But here discussion started at European level with one observation related to cancer survivors. Some cancer survivors have difficulties to access housing because they do not manage to get access to mortgage credit, because some of them will not manage to get access to the mortgage insurance that is backing the credit because of their higher mortality or morbidity risk. Of course, as an insurance industry, we've always said that we're really eager to engage with policymakers, with the cancer associations to try and address the issues that cancer survivors might face when trying to access insurance products and financial products in general, and to find appropriate solution, for example, based on solidarity. But there is one solution that cancer survivor associations are pushing very strongly at European level, and this is called the right to be forgotten. And that would, in the end, force insurance companies to not take into account the cancer history of applicants and to disregard that cancer history when pricing the risk. So that would mean, in effect, that cancer survivors with a higher mortality would pay the same premium as another consumer without a cancer history, for example. So, of course, that could be a solution, a proper one, to address the issues that cancer survivors with higher mortality risk might face when accessing insurance, because they would pay the same premium as other consumers. But, of course, other consumers would also need to step in and cross-subsidize, compensate financially for the lower premiums paid by cancer survivors. And that would not be only the other consumers, but the other cancer survivors who do not have a higher mortality risk. And this impact in terms of increased premium would differ very much depending on the types of insurance product you would have on the scope of the right to be forgotten, but also depending on whether the insurance companies would still be able to access the cancer history, even if not able to reflect it in the pricing. Because then that would give an idea to the insurance company about the mix in the portfolio, and that would avoid the insurance company being completely blind about the risks in that portfolio. Another question which is being raised with the right to be forgotten is, of course, coming from survivors of other types of disease, diabetes, HIV, and the question, natural one, is why cancer survivors would get a preferential treatment and why not us? And at the end of the day, you don't have any limits to the restrictions to risk-based underwriting, and you would simply end up the risk-based underwriting system of insurance with a very strong risk of what we call adverse selection, meaning increased premiums for all the consumers, with a risk that insurance companies are either restricting the scopes or the benefits of their products or simply withdrawing from the markets because there's no more demand for their products. So this is a very important file because it's really touching upon the basics of insurance. It's also a very emotional and sensitive file because, of course, here what we're discussing is cancer survivorship. So it's a very difficult one from a political perspective at European level, but again, with a very high risk for our industry in the future. All these different files, you may think like, okay, this is pretty forward, this is discussed in Brussels today, it will not affect us before 10 or 20 years, but that's a mistake. It is being discussed now. Some of them might be concluded by the end of the year, especially the work on the right to be forgotten, where the Commission is working together with stakeholders on a code of conduct. The retail investment strategy and the open finance might be finished with a deal by 2024. So all this is going to hit you in the coming months or years. So you need to be really prepared for that. I've also explained to you the different opportunities and risks that you have for all these different files. I have to admit that there is a very high chance that the risk scenario is prevailing over the opportunity scenario. And this is because today at European level, we are facing a number of challenges that perhaps you as an industry, you're also facing with your national regulator here in Croatia. Challenges that relate to the regulatory framework. I spoke about the increase into the quantity of regulation, but what we see also at European level is a decrease in the quality of the regulations that are being produced. It's probably because regulators have no time. They've got too much to deal with, too many regulations. They don't have the time to make sure that the regulatory initiative they're proposing are good quality. We've got so many examples. The Insurance Distribution Directive is sometimes referring to consumers, sometimes to customers. For the regulator, it was the same, but in fact, these two terms have very different legal meanings with very different legal implications. The key information document for investment products, it has been designed for accumulation products, but in practice, it also applies to the accumulation products like immediate annuities, while it makes no sense from a consumer point of view. The regulation on artificial intelligence, there's a proposal now to add the use of insurance in the list of so-called high risk with higher requirements. But insurance would be the only sector not submitted to an impact assessment to demonstrate the need to include that in the list of high risk. Another issue that we're facing is that some of this legislation is horizontal, meaning that it does not apply to insurance only, but also to all the different sectors in the economy, sometimes to financial services, including insurance. But that means for policymakers that insurance is very often only a specific detail of a big framework, and they tend to overlook the insurance aspects. Of course, here I think there is a very strong role, not only for the federations at national and European level, but also for the regulators, expert in insurance, and the supervisory authorities to step in and to explain insurance, how it works, and that it should not be overlooked when designing the cross-sectoral regulation at European level. We have also a number of insurance-specific challenges. The first one is that very often policymakers do not understand insurance. They don't know what insurance is. They think that insurance works in the same way as social security. Everyone should pay the same price and get the same benefits. And if they know about financial services, very often they think that insurance is the same as banking and investment. And this is a real risk. I mean, we see it in the European Commission where you got a number of different units, but there is only one with experts on insurance, and they're surrounded by banking and asset managers experts, and it's very difficult for them to make their voice heard. And that leads to a situation where very often the starting point of the Commission when developing legislation is to say, okay, well, if it works for banking, if it works for asset management, let's apply it to insurance because this is also financial services, it's the same business, it must be working. We see it with open finance, where the Commission is looking at PSD2 and open payment, and they think, okay, we can take that as a starting point to develop open insurance. We see it also with the retail investment strategy, where the Commission thinks, okay, well, we got MiFID rules for investment, and that must be working for insurance. But they tend to overlook what is making insurance specific, our distribution channels, our products, the insurance coverage, also the needs of our consumers. All these need to be taken into account when developing the legislation. Another issue is that policymakers at European level tend to focus on the risk related to insurance and to completely overlook the benefits that our business bring to consumers, the society, and the economy, especially when it comes to new technologies. There's always a reference to using new technologies in insurance can lead to a risk of exclusion and discrimination to the detriment of consumers, a risk that is not materializing at all. It's exactly the opposite. Where we see insurance companies making use of AI solution, very often it helps with insurability because it helps with risk prevention, it helps with risk understanding, so it benefits consumers. But this is an aspect which is very often completely overlooked by the policymakers. And again, here I think there's a role not only for us as an industry, but also for our supervisory authorities to step in and educate our regulators who are not expert about insurance, about how we work, what is the business model of insurance, and the benefit it can bring for society and the economy. And then we're facing a number of political challenges. The first one is that the adoptability of the EU proposals are very often prioritized by our policymakers over the quality of these proposals. Meaning that for policymakers, especially in the European Parliament, but also for the commissioners, it's more important sometimes to have a deal done than the quality and the real-life impact of the proposals. And this risk is getting really stronger as we get closer to the term of the current Commission and we get closer to the election of the European Parliament next year. All policymakers want to have a deal and claim back to their voters, we managed to achieve a huge achievement when it comes to consumer protection, we managed to close that regulation, that's fantastic. Political polarization is also an experience we have at European level. Very often now, especially in the European Parliament, it's either white or black. There's no nuance. And that's an issue for a business like insurance, which is a complex business, which requires nuances in the way the regulatory framework is developed. We see it with questions around commissions and payment of remuneration to distribution channels. A ban or not a ban, white or black. We see it with the use of AI in insurance. Is it high risk or is it not, white or black? And access to policymakers is also becoming a real issue for us, where before we could see policymakers being really interested to understand how insurance was working, what was the impact of their proposals on our sector, on our consumers. Now what we find is very often a closed door. For some of them, simply because they have no time to spend. They're too busy with all the different regulations they're in charge with. They're completely overwhelmed. But for another part of the political spectrum, they don't want to engage with the insurance industry. For example, when it comes to the right to be forgotten, they don't want to be seen speaking with the insurance industry. They're not interested in understanding the business model of our sector and the type of benefits we can bring to consumers. Again, I think here, as an industry, we face that challenge, but our supervisory authorities have an easier access to these policymakers to explain to them all these different insurance-specific aspects. I think I've depicted quite a dark picture about what's going on at European level and how this could impact you at the end. I think my objective was really to wake you all up before it is too late. Again, you all in the industry, the distribution, intermediaries community, supervisory authorities, and regulatory authorities. I think there is a way for us to address all these different challenges and try to get the regulatory framework at European level working for your business. But for that, we really need to all speak together with one voice. So I would call you on joining your Croatian association, on joining Insurance Europe, and speaking with one voice towards our European and national institutions and authorities. Be proactive and don't wait in 2 or 3 years to face new rules that are unsuitable to your business. Act now and join us now in this messaging. And when you do that, of course, try to educate and explain how insurance works. Again, the benefits in terms of reputation that insurance brings to society, bring to consumers, and bring to the economy. I think altogether, industry, distribution channels, supervisory authorities, regulators dealing with insurance, we can be stronger together, and together we can make a difference to make sure that the regulatory framework you are going to be facing in 1, 2, or 3 years is going to be the one you need and your consumers need as well. Thank you very much for your attention, and good luck.